With the recent monster rally in the S&P 500 over the past few weeks, it feels like the market is almost ready to be back into a full-on bull market, as many names across many sectors are inching closer to previous or even all-time highs. But one of the long-time popular dividend stocks for long-term, more conservative investors is falling far behind and even getting beat up more as of recently. Now, the stock we're talking about is ticker symbol VZ or Verizon. And due to a new report revealing that the telecom giant's historical use of lead-covered cables is contaminating many parts of the country, the threat of potential legal action and uncertainty about how the lead issues will be resolved have prompted multiple Wall Street firms to downgrade the stock, leaving many dividend investors like myself in sort of a panic, and other dividend investors in a state of possible greed, as Verizon's dividend yield keeps on rising due to the recent sell-off. Now, in this video, we are going to go through exactly what is going on with Verizon, the future outlook, and why I personally bought over 1,200 shares of Verizon. Now, stay tuned because we are going to go through all this and more. Right after you please drop a like on this video and subscribe for more future content like this. Now, first off, before anything else, let's address the elephant in the room. Yes, I personally own over 1,200 shares of Verizon, well over $50,000, $60,000, $70,000 worth. And this is because the cost basis on some of my shares is very, very high. Now, I first started buying shares of Verizon many years ago, when Verizon seemed like a quiet, low beta telecommunication company that did have a boatload of debt, but also a ton of operating cash flow, which could easily sustain Verizon's dividend long term. And Verizon's dividend has been pretty good historically speaking, even seeing raises every year or so, at least over the last 10 years. Now, this is of course compared to Verizon's brother or sister, however you want to phrase it, AT&T, which actually saw a massive dividend cut just around a year ago. But before we go any further, let's talk a little bit more about Verizon so we can all get up to speed. So Verizon was formed in 2000 when telecom giants Bell Atlantic and GTE merged, a $52 billion transaction. But the company's predecessor's roots trace back to the late 17th century, when Alexander Graham Bell patented the telephone and founded AT&T. Now, with the largest landline network in America, Bell's company had an effective monopoly over the phone system until the government forced the firm to break up in 1984. AT&T divested 7 regional operating companies, resulting in the creation of Bell Atlantic. Now, without sugarcoating anything, historically speaking, Verizon's share price has performed pretty horribly. And there was a span in time, maybe 2010 all the way up until 2020, where Verizon was steadily gaining share price and again paying a pretty good starting dividend yield, which is why I decided to buy a ton of shares. And keep in mind, as of right now, full disclosure, I am down around $15,000 or $20,000 on my actual share price of Verizon, but I have been getting paid a quarterly dividend of around $800, $900 with all my shares included on a quarterly basis, and I have been selling covered calls pretty much since the start of holding on to my Verizon shares, which has also been able to allow me to recoup around $4,000 or $5,000 since I first owned the shares. So net, maybe I'm down around $10,000 or so on the shares of Verizon that I still own, and I'm going to continue to own Verizon long term into the future and going to continue to keep selling cover calls to regain some more possible losses ahead. But to go a little bit deeper into the recent reason that Verizon has been plunging in share price, it says that AT&T and Verizon shares have tanked since the Wall Street Journal report revealed that the telecom giants' historical use of lead-covered cables contaminating many parts of the country. The threat of potential legal action and uncertainty about how the lead issues will be resolved has prompted multiple Wall Street firms to downgrade the stocks. Now, the industry's historical use of lead-sheathed cable is likely to remain an overhang for the stocks and valuations for the last few months and potentially longer until the market can better measure the financial risk, which is hard to do right now. We don't know how big of an issue this is going to be necessarily as of yet. And this is definitely the case with the way that Verizon has been trading over the last few days and even the last month. The market is trying to price this in while Verizon's share price is trying to find a floor. But with this recent scandal going on and Verizon's high debt costs, simply say dividends even recently downgraded Verizon from a very safe dividend to a safe dividend, an 87 very safe all the way down to an 80 safe. And this was as of March 2023. It said, as we highlighted last August, increased network parity has led customers to prioritize customer service and pricing over network superiority when choosing a mobile provider, causing Verizon's industry leadership to fade. It then said a more competitive, slower growing wireless market and rising borrowing costs, around 25% of Verizon's debt carries floating rates, create a somewhat muted outlook for the following year. Management's full-year guidance issued earlier this quarter implies that Verizon will generate approximately $17 billion of free cash flow. Well, that's up from $14 billion in 2022, thanks to lower capital spending on 5G network expansion. It's well below the $21 billion the management had hoped for at Verizon Investor Day around a year ago. Now, Verizon's $11 billion dividend will remain covered with a reasonable free cash flow payout ratio of 65%, but chipping away at the company's $150 billion debt pile, which spiked in 2021 following record spending on spectrum licenses to support 5G. Now that is going to take time. So when it comes to Verizon, the overall service is obviously superior to other carriers, but with more competition and of course that nagging debt, it's sort of making a hard case for investors to really want to latch onto. But some investors are looking at these recent events as an opportunity for long-term investors to lock in an over 8% starting dividend yield, with potential dividend growth still. And with Verizon's share price significantly dropping as of recently, it could be offering investors a historical high dividend yield and also the potential for capital appreciation. And on top of that, some investors are saying that the market's reaction to the environmental concerns with the lead cables could be a massive overreaction. But that's going to be something that only time will tell. And with all this, Verizon still maintains a strong cash flow and a BBB plus credit rating, making Verizon considerably undervalued at the current price, offering again long-term potential attractive returns for more dividend-focused, income-focused investors. So where do investors go from here? Well, Verizon stock currently offers patient investors an excellent yield with the potential of capital appreciation. Again, the potential. The stock has been beaten down with the recent news, but it appears that the market might have overreacted. And again, in the following days, we're going to know more about that. Verizon carries a historical high dividend yield of 8.3% as of right now, and it is priced at just 6.4x blended PE, which is once again far below where Verizon normally trades, making it either. Now with all this, some investors are thinking that from here, Verizon either goes to zero, or we're going to look back and say that Verizon at these current levels was a massive buying opportunity for investors willing to wait. But I want to hear what you guys think down below when it comes to Verizon or even any other stocks in the telecommunication space. Are these stocks you would currently purchase, or are these names that you would in touch with a 10-foot pole? Now, once again, when it comes to my current Verizon holdings, I'm personally holding onto my shares and I am not buying any more shares from here. I feel like my overall portfolio already has way more Verizon in it than I particularly want at this point. But will I be selling Verizon at these levels? Absolutely not. I'll continue to sell covered calls and hopefully continue to receive that massive dividend on a quarterly basis. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks for stopping by, guys, and I'll see you in the next one.